Ladies and gentlemen, welcome back to the channel. Today is a big day. It is the day to prepare for this upcoming week, to get your game plan in alignment with what can make you money. And this upcoming week is going to be a wild one for AMC in particular and for the broad markets. You are going to have up front and center bank concerns potentially getting worse, or we might take a little relaxation off of the fears that banks are ultimately collapsing. Now, who knows? We'll see what ultimately happens with that, but we are going to also get some very big economic data, including the CPI report, which comes out on, you guessed it, March 14th, the same day that AMC also has their vote. So I think all of this information is warranted that we go over here in this video, as well as give you guys my price prediction for AMC by the end of this week. Keep in mind, I am not a financial advisor. I'm not a financial planner. I'm not your dad. I'm not your uncle that thinks they know the markets and tries to give you advice. I'm not going to be that guy. We're going to go over information that is public information and try to reasonably come to conclusions of where AMC stock could go. What you decide to do with that information is up to you. So, first things first, hit the like button and subscribe to the channel if you have not already. I mean, that's like common sense. You hit the like button and subscribe if you have not already as soon as you start watching these videos. Now, let's get into it. So, just a brief rundown. The important things for this week, broad market speaking, number one is going to be the banks. Does this situation get better, or does it get worse? Bottom line there. Now, I would say a positive to this whole bank situation is that the fear is at the highest level since 2008. So if banks don't continue to show stress and more banks start to tell you, hey, things are getting bad, right? We're getting bank runs. We have to sell assets, raise capital. If you don't get any new bad news, the fear probably going to go away relatively quickly. Now, to the contrary, if you start to see First Republic in trouble, if you start to see Ally in trouble, if you start to see these smaller banks showing more stress, this situation could get a whole lot worse. Now, like I said, if it does not, it's going to go back to normal relatively quickly. Think about Evergrande. Think about FTX. Think about all these other things that have happened bankruptcy-wise over the last year or two. If it doesn't continue to get worse, it usually gets better pretty quickly. And that's what we've seen over the past months and years. So hard to forecast exactly what's going to happen with that. It does not look good, though, from where we currently sit. So that's really a coin flip. That's a toss-up as of right now. Now, on top of that, you're going to get CPI, which comes out on Tuesday. Take note. I said the banks are going to be more important than the CPI. I listed that as number one because CPI will be important, but it's not as pressing as these bank failures. Now, we'll get into the expectations for CPI, what the markets are expecting, all of that. But I do want to talk briefly about this March 14th vote. If you guys have not seen the last video, March 14th is going to be a total dud for the shorts. Nothing is going to come out of this. I don't think AMC stock is going to necessarily drop off of this vote alone. Now, if CPI takes down the markets, if bank fears take down the markets, that's going to be a different story. But I don't think March 14th is going to be a substantial day for AMC, at least to a downside move. I think it could actually fuel a big upside move. Now, I think with probably a 98% probability, it's going to come back as a yes, this vote on March 14th, on Tuesday. It's going to come back as a yes. Markets likely, one, have already priced that in, and two, it's going to be the time and place where hedge funds that have been betting on this arbitrage trade are going to have to kick the can down the road, extend out their short positions, put more hedges on, right? Or get out of those positions if they think the court proceedings are not going to go their way. Now, I think it's pretty clear that Allegheny County Pension Fund, I mean, they're right. They're spot on. AMC diluted AMC common shareholders' rights to vote with doing this deal with Intera Capital. We essentially have zero say on this whole vote when Intera Capital owns almost 40% of the shares, share voting power that they need, I should say, to pass this initiative. So that creates an interesting dynamic, and I don't think that means in the slightest bit downside for AMC directly off of this vote on March 14th could actually be quite the opposite. Could be a, buy the rumor or sell the rumor, buy the news kind of event, as AMC has been selling off over the last couple of days. Now, let's get into some of the economic data as well as the data behind AMC, and then we'll jump to the chart. So, as far as AMC is concerned, still on the threshold securities list. We'll look at the FTDs in just a second. The live short interest of free float sitting at 23.5%. It was as high as 25% just a couple of days ago, like a week ago. It's hard to say exactly where the number is. Probably still around that 25% range as far as the official reported short interest that we did get. That was the last report, around 25%. And I think it's reasonable to expect it's probably about the same, which is very high. Keep in mind it went from about 19% to 25% based off of this arbitrage trade alone. Arbitrage trade gone wrong, well, that means a lot of shorts short on a stock where they don't necessarily want to be short on. Cost of bar average, 240.67%. Cost of bar max, 286.5%. Cost of bar minimum of not negative, 0.59%. Interactive Brokers has about 400,000 shares currently available to be sold short, to be lent out. 102% cost to borrow rates. And that's another aspect of all of this. If you have been trying to play this arbitrage trade that no longer looks like a home run trade, you have taken out short positions at wild cost of bar rates, 100%, 200, 300%. That's where on average most of these recent short positions have been taken out. Could be higher than that. We just seen cost of bar rates in the 900% range just a couple of weeks ago. So does not make for a good position for the hedge funds. Now, option activity over the last week has been about 16% positive, 379 orders totaling $153.33 million. Again, not a huge surpriser. We've seen a very low positive order value, even on weeks where AMC does go higher, and I think that does have to do with shorts hiding some of that short interest on the option chain, because the option expiration for March 17th is huge. Taking a look at that, you have 31,000 calls that are currently in the money, 661,000 calls that are out of the money. In the money puts at 274,000, out the money puts at 908,000. Some very high numbers that you are seeing here. Higher than what you have seen really ever with AMC, besides what that June 1st option expiration that you've seen, obviously, of 2021. It's been years since you have seen option activity like this, and I think it's no surprise that it is the week of the March 14th vote. There's a lot of hedging going on, and the fact that nothing is going to happen means that you're going to have to see a lot more re-hedging or rolling over of these positions, which inevitably will be a bullish thing for AMC. And I think after the last couple of days, AMC has fallen. If you had a short position and you were positive on it, looks like a pretty good time to get out of that position, right? To, make a little bit of money and GTFO, because this court proceeding probably not going to go the way AMC wants it to go. At least from just my interpretation, it's very obvious to see that AMC is very much guilty of what Allegheny County Pension Fund is suing them for. That's just stating the obvious here. I mean, AMC, in fact, diluted AMC shareholders' voting power by doing this deal with Ontario Capital. It's straightforward, just like that. We don't have a say. We're not essentially voting on this. It's already been voted for us. It's like a rigged election, for lack of a better analogy. Now, if we take a look at the FTD numbers, this could also continue to fuel some upside for AMC. If Tuesday is also a bullish day, this could make things that much more bullish, and it is the FTD numbers. So on Monday, on March 13th, you kick off with 1.8 million FTDs, and then on Tuesday, March 14th, you get about 2.5 million FTDs. On Wednesday, 3.4 million FTDs. On Thursday, about 4 million FTDs, and on Friday, 6.8 million FTDs. So it just ramps up from Monday through Friday, getting higher and higher every single day. Again, I don't think that is a huge surprise, and I do think this could, again, fuel some of that upside that is still to come. Now, something that I want to point out while we're on well, I'm thinking about it, to be quite honest, is you want to watch the probability of a 50 basis point rate hike or a 25 basis point rate hike. You have seen the probability of a 50 basis point rate hike basically collapse ever since SFV Bank just went bankrupt and other bank stocks have been falling. You have seen this probability go from about 80% 3 days ago down to 40%, going from a certainty 3 days ago that we're going to get a 50 basis point rate hike after Fed Jerome Powell said, yeah, we might increase the pace of rate hikes from 25% to 50%, or 25 basis points to 50 basis points. He didn't literally say that, but I mean, if you're going to increase the pace and you are at 25, that means you're going to 50 at least, right? Well, due to the fallout of SVB Bank, that is very deflationary, and that creates a lot of pressure in just financial markets overall, and that's one of, the Fed's dual mandates. Price stability and maximum employment. You can't really have price stability and decent financial conditions if banks are imploding. The two just does not mix, and you can't have maximum employment with banks imploding, right? Makes a lot of sense. You're seeing a lot of contagion happening due to SVB ultimately going bankrupt. So you want to see if these probabilities start to move around, or potentially if a pause starts to get priced in, if CPI comes in lower than expectations, and if more banks start showing more stress. So this, in a weird way, could force the Fed's hand to pause or give you smaller rate hikes, or even indicate a pause is coming. So I think that is very interesting. Probably the thing I'm going to watch the most is the bond market, the probability of a 50 basis point rate hike, or like I said, that subsequent pause. Now, for economic data, starting off on Monday, you don't really have anything. On Tuesday, you're going to get that inflation report. Now, let's go ahead and refresh this to see if we do have any updated okay. Jeez, I hate when it does that. Let's go ahead. I gotta scroll all the way up now. Okay, so for the core inflation rate for February, the forecast is for 5.6% year-over-year inflation. That was the same reading that you got in January. The inflation expectations, that was core, by the way. Core inflation year-over-year expected at 5.6%, same as last month. Inflation rate year-over-year headline number expected at 6.1%. Last month's reading for January was 6.4%, so expecting a year-over-year slowdown. Inflation rate headline month-over-month, you are expecting a 0.5% increase, same as January. And the core inflation rate month over month, you are expecting 0.5% of an increase, higher than the 0.4% that we've seen in January. So expectations are pretty high for inflation overall. You're expecting that month over month headline and core number to go up. That would not be a good thing. If it does come down, that's going to be probably the best case scenario, and I would expect a rally off of that, considering if the banks do not get worse. Now, I keep stressing that the banks are the most important thing for this week. Now, if you go ahead and add all of this together, I know it's a lot to take in a very short amount of time, but ultimately, these things usually end bullish. Now, specifically with AMC, if the banks don't get worse, if CPI is not a complete shit show, if the March 14th vote does come back as a yes, and we get that rolling over, we get potentially 4 share recalls, you get shorts closing out of short positions, where could the stock ultimately go? Now, I don't necessarily think you get a full-on short squeeze, right, until at least April 27th, or whenever a court says this vote will not go through. I think that's when all of those shorts that were in this arbitrage trade to begin with would get out of those short positions, right? That's just common sense here. They don't want to be short on AMC. They're short on AMC because this arbitrage trade was seen as a home run trade. Now, where could that send AMC this week? And that's ultimately what we want to know out of these videos. Now, I would target the upper end range of this trend line. And, you know, by end of the week, that could be $9.50, $10 per share. I think that's more of a best case scenario. More of a base case scenario would be in that $8 to $8.50 range. See, I do expect some substantial upside here. If you take a look at a percentage gain from here to $8.50, would be about a 58% rally. Now, I don't think you continue to break down from here. Look at where we are right now. Over the last couple of days, it's just been red candle after red candle after red candle. It's been pretty brutal, and we were just at, you know, almost $9, $8.50, just a week and a half ago. So this is not too far off the realms of possibility. Now, like I said, my base case in between 8 and 8.50 due to everything we've talked about here in this video. Worst case scenario, guys. You got to acknowledge base case, best case, worst case scenario. Whenever you buy a stock, you want to have your worst case scenario, your base case scenario, and your best case scenario. Base case scenario, like I said, around 8 to 8.50. Best case scenario, around $10 per share. Worst case scenario is probably at this longer term bearish downtrending line, this blue line right here, which by the end of the week would be about $4.50 per share. That would mark, let's see, I believe it's like 20% downside from here, 17% downside from here. It would be a pretty rough week overall, and I don't really forecast anything that could cause AMC to drop like that. I don't think the March 14th vote would do it. CPI could do it if it's much higher than expectations. Granted, the expectations are already very high. The only thing that could drop AMC to this extent would be another bank going bust. And I think that would just drag down the whole markets. Now, if we take a bigger picture at the markets, or take a, you know, bigger look at the markets, I mean, you've went from recently from 418 down to 385, where we currently sit. On a percentage basis, that's losing about 7.5% of value. Now, if things do get worse, you find your way to 375. That is downtrending about 10% from 418. Now, you could make it to 360 if another bank goes bust. That would be down about 13.5%. I don't necessarily think another bank is going to bust that fast. 48 hours is historically fast, basically instantly getting shut down from trying to raise capital in 48. It just doesn't make a whole lot of sense. So this is either going to get much worse, or the fears are a little bit too high and it's going to get better quickly. So that's really the big caveat of this week. This week would be a lot more simple if we did not have banks going bankrupt. So that is going to do it for this video. Let me know what you guys think about all of this information. Where do you think AMC stock is going to go? What do you think the March 14th vote is going to do? And ultimately, do you think more banks are going bust soon? Or do you think the fears are overblown? That is going to do it for this video. Hit the like button and subscribe to the channel if you have not already. Thank you for watching, and I will see you in the next one.